Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
I was waiting to see if Jiminy Cricket was going to leave us today, but I think we have a permanent resident for the near term. 'Tis the season.
Well, very good.
Yes. All right. Today we are going to talk supply and demand numbers. We'll talk a little retail prices. We'll also finish up with some consumer sentiment. But to kick things off, let's recap what happened this week in the markets.
Yes, on the cattle side this week, we had fed live cattle up nearly $1.60. We saw those feeder cattle markets stronger this week. They were up $3 to $5 on the week. On the future side, October fed cattle futures contract was up $3.65, and that October feeder cattle contract was up nearly $5 this week, Megan. When we look at the beef side, choice box beef prices were down $5.85 this week. We lost on all components of that choice box beef price, but choice box beef is still nearly $53 above where it was a year ago. On the hog side, cash barrels and gilts this week were 60 cents higher. We also saw the October lean hog futures contract higher this week, up nearly $1.50. And the pork cutout value also gained up $2.05. We really had strength across the board this week in those pork cutout values, with the exception of ribs being down slightly this week.
Well, cash hog numbers were up a little bit this week, which is nice to see. There really has been kind of just a sluggish feel to the market in general. How much of that is concern about long-term demand? Maybe some, we talked a little bit about seasonality here domestically in the last couple of weeks, but really looking at that demand picture and how it comes into play.
So I think we're certainly in a seasonal pattern where a little less demand strength as well as stronger supplies, I think have been leading to that little bit of sluggishness that we see. And again, I see an industry waiting to see what hogs and pigs gives us in terms of what the supply side of the industry is doing, and whether there's been enough red ink to get some changes to happen in terms of breeding inventory, et cetera.
We have a long wait for that, and I feel the same way that we're looking ahead to that. I think we're going to look at what breeding herd as well to see how some of those changes have come into play. But we still have 2 weeks, and I feel like there's going to be a lot of feet dragging in the coming weeks.
I absolutely agree. I'm seeing everybody really being focused in on, did we lose sows or did we not? What's fairings going to look like as we look ahead? Are we talking less production as we start 2024? I think all those are the questions that seem to be on people's minds, despite the fact we got to get to the end of the month to see that information.
Well, it gives us plenty to talk about over the next couple of weeks. As we come into this week, we'll talk about slaughter numbers here running or through today with a full week under our belt. How are things looking?
Yeah, so some pretty good runs this week, Megan. USDA tells us for the week ending September 16th, 632,000 head of cattle this week. That's 73,000 over the lower level of last week, but still 41,000 less than what we did a year ago. On the hog side, a big run, 2.531 million head of hogs this week. That's 297,000 head more than the shortened week last week, and 45,000 head more than what we did last year.
As we look at those numbers year over year, how are things running?
Yeah, so year-to-date cattle slaughter down 4.3%, while the hog slaughter is running 1.3%.
All right, I would call it the big report of the week, which would be supply and demand numbers. Came out earlier from the USDA. Really kind of a snooze fest across the board.
Yeah, so I'll actually start on what happened on the crop side. So although we cut yields, especially on the corn side, and found more acres, so production really wasn't changed very much. So they're still USDA projecting a $4.90 corn price again this month for the 23-24 crop. So no real feed cost changes out of what we got. On the livestock side, so some changes I number one point out, when you look at 2023 projections of meat exports, so beef, pork, and chicken exports, USDA lowered those by 325 million pounds this month relative to where they were at in August. Um, that just pushes a little more meat back on domestic markets here. They didn't do a whole lot, so down a little bit in terms of barrel and gilt prices for 2023. But all in all, not a lot of changes. When you look at their projections for 2024, not much of a change anywhere. Beef production, pork production, they left them at the same place they were in August for September. Just a modest downward adjustment to chicken production relative to where they were in August. So not big changes. I have to go down and look at turkey prices being $7 lower to get any change in their projections for 2024 livestock prices.
Well, we're not improving in the price picture. We're also not getting worse. Is looking at a report like this in September that's fairly not exciting. Is that overall good news for producers?
So maybe it is, and maybe looking at it this way. So fed cattle, USDA says will be up 4.2% in 2024 relative to 23. So we're going to keep chugging along on higher prices for cattle, according to USDA. Hog prices, barrel and gilt prices, 8.5% higher in 2024 relative to 2023. Maybe that's all really good news that they've held those for 2024 as well. And it's really the poultry side are the only prices that we're talking about, lower prices in 2024 relative to 23 from a meat perspective, at least.
And I would assume that would be contingent on if we have another outbreak as we're moving into migration season of highly pathogenic avian influenza.
Thank you very much for saying that out loud so that we remind ourselves of the possibilities that high path AI could just shift those projections immensely as we go through the next few months.
I spent some time with some very smart people from the CDC this week. I'd like to assume that I absorbed some of their knowledge about pathogens and viruses, and it was a fascinating tour in general, but their conversations were about diseases like that as well. And it was interesting to think about it from a perspective in terms of what happens with the supply and demand situation overall.
And this is certainly a case that we've been living on again, off again for a while of some years where high path AI has cut supplies enough. And I'll always say you cut supplies and you get much higher prices. And we've had our experience with that the last few years dealing with high path AI.
All right. So we're going to flip and talk more consumer and demand side of things as we take a look at retail prices for August. Some good news, bad news, depending on what side of the coin you're looking at in terms of the price picture.
Yeah, that's true. I will say when you look at this whole price picture, let's just start by reminding ourselves. So choice retail beef prices relative to 2019 are 36% higher. Pork retail prices are 26% higher. Chicken composite retail price is 35% higher. So we certainly have higher prices today than we had prior to COVID outbreak. For August, choice retail beef price was $8.23. That was down 1% relative to where it was in July. Still 8.6% above where it was a year ago. On the pork side, a little bit of different story. So a $4.83 a pound pork retail price is 2.8% above where it was last month, but still 2.2% below a year ago. And for the Meghan Grebners of the world that love bacon, sliced bacon down nearly 12% relative to a year ago, just to give you a little bit of context of some of those individual components.
Can you tell my grocery store that it's down that much? Because we're not seeing that much of a decline in terms of what we're seeing on the retail side of things. I hate to tell you.
So maybe one of these days you're going to get a buy one, get one free, but not yet.
I mean, sometimes when we take a look, though, we talk about this and we joke about the bacon price in general, but food inflation, while prices are still higher, when we look at the overall picture, it's a better story. Not a great story, but an improved story.
So for many products, we're slowing the rate of inflation. For some products, we've actually seen declines during some months. It's interesting where we sit today. So we're starting to push beef prices higher again. But generally, yes, relative to where we've been, the lowest food inflation we've seen since 2021, which is a move in the right direction for us. It's been stubborn in terms of higher prices. Double-edged sword. If you're a consumer, you like lower prices. If you're a producer, then you might get more worried about what that means. And I think it's important to remind ourselves those margins especially from packer to retail, have stayed pretty wide. And so what happens ultimately to producer prices when you struggle with where retail prices are at is an important piece of this conversation.
And I would assume one of the products that we talk about actually taking a step back or dropping would be eggs, because it's recovered from the shortage issues late last year and earlier this year due to high path avian influenza and supply issues.
I think this is a good place to get. So I've been saying a lot recently that I think demand, especially at the farm gate, however you want to measure that, for ag commodities is becoming less responsive, more inelastic, which is to this whole volatility issue. So we saw egg prices move up substantially when we were short, and we've seen them move down substantially as supplies have recovered. I'm afraid we're in for that kind of volatility as we move forward, if I'm correct that we're seeing ourselves become a lot less responsive to price changes than we were historically.
So the acuteness of it may not matter in the long run.
I think everybody better be ready for more volatility.
Okay. All right. We're going to finish up today and talk a little consumer sentiment. As you take a look at these numbers, kind of a step back again in terms of consumer sentiment.
Yeah, that's true. So we got the September preliminary numbers out this week. So relative to August, we're down 2.6%. That's still 15.5% above where we were a year ago. So short term, a little negative relative to a year ago, still positive. Current economic conditions, a portion of that consumer sentiment, down 7.8% relative to last month. That's probably the negative drag. So expectations are still slightly positive out of this. I think things like higher interest rates, higher gasoline prices, maybe growing probability of a government shutdown, all of those things work to make that consumer sentiment less here in the September numbers.
When we look at, I'm going to pull this back to farmers and producers side of things. You bring up the government shutdown. We've seen the headlines about the appropriations conversations and the struggles that we're seeing to get progress done there, knowing we have a farm bill that expires in 15 days. We're obviously looking at an extension. How does that play out for producers when we think about the things that matter to them? Programs, offices, those essentials. Do we get worried, or do we have faith that those things will be, because they're essential, will be available to us as producers?
So I think it's going to be a little uncertain out of the gate if that's what we do, is we end up shutting down. I think the the most important thing everybody's going to miss is the fact that you and I don't have to cut this on Fridays because we no longer are going to get any data. All right. So I joked for a second before being more serious about we're going to miss some data. And for those that remember 2013, there's still holes in the data from when reports weren't done. Someone's going to have to go through USDA and decide what is essential. And we might be surprised that more things are not in that essential category than we would like. I think from a farm bill perspective, yes, we're likely not going to write a farm bill between September 15th and October 1. And so getting some type of extension done is the likely outcome of that. I don't think there's a lot of program sign up issues that are going to be coming too quickly. So I think we're okay in the very short run. And generally, I'll say to this whole farm bill extension, it's not until we get to the first of the year that we start seeing some things that are more concerning. Now, some programs in the farm bill may not have funding after we talk about doing some type of extension. Some of the export programs might be missing some funding opportunities, which could hurt us as well in some markets overseas. So it's number one, government shutdown will not be fun. There'll be things we miss out of the information that's available in the programs and how they're going to operate if we're talking about a true shutdown.
And 2013 was tough to navigate in what you do and what we do. And here's hoping there's some sense that happens and we don't run into that issue again, but the clock is ticking.
And so it's as simple as, what is the market clearing price for hogs or cattle in a day? That becomes more difficult when we've gotten used to selling cattle and hogs off of reported USDA prices, and those reported prices are no longer available. How do you clear those markets? It creates some issues, and we remember those from 2013. It creates some uncertainty, and I think those are some of the things that we could deal with if we talk about a government shutdown again this year.
Scott, as we wrap up today, looking ahead to next week, what reports do we have?
We got livestock slaughter next week, Megan, and then we finish the week with cattle on feed.
What are you looking for in next week's cattle on feed numbers?
Maybe continued lower placements after last month being lower as well. We'll see if we continue that trend, and it's going to start to give us more indication of tightness in the second half of 2024 and some guide of how much higher could cattle prices go as we look into 2024.
Scott, it's always great to see you. We will talk to you again next Friday.
Sounds good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And for a rundown of what happens every day with the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner.